A hospital stock listed at just 300 rupees today trades near 866 rupees. Almost 3 times your money in under 3 years. And here's the strange part. In the year FY26, in fact in the Jan to March quarter, this company's sales grew 47%. Apollo, the biggest hospital chain in India, grew 18%. Apollo earned 6,605 crores in that quarter. This company earned rupees 342 crore rupees. Now let's be clear about the size difference. Apollo earned 6,605 crore rupees in that quarter, and the company that we're talking about earned just 342 crore rupees. So basically, Apollo is nearly 20 times bigger than the company that we're talking about. But on speed, the small one is winning. And on the price to earnings ratio, the yardstick investors use to judge if a stock is expensive, it is cheaper than Apollo, cheaper than Max, cheaper than Fortis. Fast and cheap almost never sit together in the stock market. When they do, there is always a reason. Are you ready to find it? Yatharth Hospitals. This is the story of Yatharth Hospitals. In the next 5 minutes, we will answer 3 questions. 1. How did 2 brothers from a farming family build a 8,300 crore company? 2. Why does the market price it below every big rival? And 3. Should you buy it now and at what price? Let's start in a small town in western Uttar Pradesh. Dr. Ajay Tyagi was born into a farmer family. He chose medicine instead, studied at Meerut and Lucknow, and then became an orthopedic doctor. His younger brother, Kapil, followed the same road, training at government hospitals in Delhi. In 2008, the brothers opened a clinic in Noida. Now try and understand the market at that time. If you fell seriously ill in Noida or Greater Noida, you crossed into Delhi for treatment. There was demand, but there was no serious hospitals. The brothers attacked just that gap. First hospital in Greater Noida in 2010, then Noida in 2013, then Noida Extension in 2019. Today, 8 hospitals and over 2,555 beds, almost all around Delhi NCR, and plus 1 hospital under construction. And in FY26, they produced their best year ever. But inside that best year is the exact reason the stock is cheap. With me so far? Because we're getting to the numbers. FY26 report card. The audited FY26 numbers. Revenue 1,207 crore rupees, up 36%. Profit 170 crore rupees, up 30%. 3 new hospitals were added in Delhi, Faridabad and Agra, all in one single year. Now, hospitals earn from 2 things primarily. Number 1, how full the beds are. Yatharth runs at 68%. And 2, how much each filled bed earns per day. For Yatharth, that number is about 33,000 rupees. Now, here's the problem, viewers. Around 35% of Yatharth's income comes from government schemes like CGHS, the scheme for central government employees and their families. Now, these schemes pay fixed lower rates and they pay late. On average, Yatharth waits 112 days to collect the bills, nearly 4 months. Apollo and Max serve far more private and insured patients who pay more and pay also faster. And that in one line is the discount. And it is exactly the problem the company just spent 100 crore rupees trying to escape. The 100 crore rupee gamble in June 2026. Yatharth paid 100 crore for an unfinished building in Gurugram. No beds, no patients, just concrete. It will spend roughly 100 crore rupees more to open it by April 2027. Why Gurugram, you think? Richer patients, private insurance. The company expects each bed there to especially earn over 50,000 rupees a day, which is 1.5 times its current average. But Gurugram is also where Medanta, Fortis, Artemis and Max already stand. Yatharth is walking onto their home ground and betting 200 crore rupees that it can take their patients. So, genius or overreach? This here is our honest read. Lessons from Yatharth. Couple of lessons here for any investor. 1. A stock can be cheap for a reason. Always find the reason before you celebrate or jump into the bargain. 2. Growth eats cash. Yatharth's free cash flow has been negative for 3 straight years because every rupee earned goes into hospitals. That's not a bad thing, but also not a great thing either. 3. Who pays a company matters as much as how much it earns. A hospital earning from government schemes gets low fixed rates paid months late. A hospital earning from insured private patients gets higher rates and also paid fast. The revenue looks the same on paper, the business is not. Do not chase Yatharth Hospital stock at about 866 rupees, right next to its all-time high of 890 rupees. If the market offers 720 to 790 rupees, then that is the accumulation zone. And what do you think the horizon would be? According to our call, it could be 3 to 5 years. And know the scars especially. Tax authorities searched the group's premises in 2023. Management says the matter is nearly closed with no assets frozen. Price that risk in before you press buy. Please remember, this is an analysis, not an advice. Speak to a SEBI registered advisor and do your own diligence, because every company has a story. Most investors only ever see the price. Signal Bridge exists to walk you across the bridge and also tell you the story. If this crossing was worth your 5 minutes, subscribe, and the next talk is waiting on the other side.